If you think the UK housing market is moving as one in 2026, you are already behind the curve. Because while headlines talk about weak growth and falling prices, something very different is happening beneath the surface. In some parts of the country, homes are selling in just 2 weeks. Prices are rising faster than inflation, and buyers are being forced to compete. In others, especially in the South and London properties, are sitting unsold for months, prices are being slashed, and sellers are losing control. This is no longer a national housing market. It's a postcode by postcode battle. And where you buy or sell in 2026 could mean the difference between growth and regret. Zoopla's latest analysis makes one thing very clear. The UK housing market has fractured. Nationally, average house prices are expected to rise by just 1.5%, a figure that sounds stable but hides extreme regional differences. In reality, buyers and sellers are experiencing completely different markets depending on location. In some areas, demand remains strong, homes sell in days, and prices keep climbing. In others, affordability pressures, higher mortgage rates, and excess supply are dragging prices down. This shift means national headlines are becoming increasingly misleading. What matters now is not the UK market as a whole, but the exact town, city, and even postcode you are dealing with in 2026. One of the strongest themes in Zoopla's data is the growing divide between the North and the South. Scotland and Northern England are set to outperform the rest of the country, while much of Southern England, including London, is expected to lag behind. The reason is affordability. In northern markets, homes are still priced within reach of local incomes, allowing demand to hold up even with higher mortgage rates. In the South, stretched affordability has finally hit a breaking point. Buyers are far more cautious, sales are taking longer, and sellers are being forced to compromise. This divide is no longer temporary. It is becoming a structural shift in how the UK housing market behaves. Scotland dominates Zoopla's rankings for one simple reason: its housing markets remain balanced. Zoopla examined 120 postal areas using affordability, speed of sale, price reductions, and levels of unsold stock. The areas that performed best consistently shared the same traits: homes selling quickly, minimal discounting, and limited properties lingering on the market. 9 of the top 10 markets for 2026 are in Scotland, an extraordinary concentration. This tells us demand is not speculative or fragile. It is real and sustained. Buyers are still active, sellers remain confident, and pricing is realistic. In an uncertain national market, Scotland has become the UK's most resilient housing region. At the very top of Zoopla's rankings sits Motherwell, and the data explains why. Homes here are selling in just 14 days on average, a pace most of the country can only envy. Only a small proportion of properties require significant price cuts, and very few homes sit unsold for more than 6 months. This is the hallmark of a healthy market: strong demand meeting realistic pricing. House prices in Motherwell rose by 3.4% last year, and Zoopla believes similar conditions could continue into 2026. In a national market defined by hesitation and caution, Motherwell stands out as a place where confidence has not disappeared. Motherwell is not an outlier. It is part of a broader Scottish trend. Cities and towns such as Glasgow, Falkirk, Kirkcaldy, Perth, and Inverness all show remarkably similar dynamics. Homes typically sell within 2 to 3 weeks. Unsold stock remains low, and large price reductions are the exception rather than the rule. Falkirk, for example, saw prices rise by more than 4% last year, with very few homes stuck on the market. These conditions suggest that demand is not being driven by hype, but by genuine affordability and employment access. Scotland's strongest markets are proving that steady, sustainable growth is still possible in 2026. Outside Scotland, Northern England is quietly staging a comeback. Zoopla's data highlights towns such as Wigan, along with Liverpool and Stoke-on-Trent, as some of the best-performing English markets heading into 2026. These areas share a critical advantage. Homes remain affordable while still offering access to major employment centers. In Wigan, prices rose by around 3% last year, and despite slightly longer selling times than Scotland, demand remains resilient. Investors and owner-occupiers alike are drawn to these markets, because they offer growth potential without the extreme financial pressure seen in the South. Northern England is no longer lagging, it is repositioning itself as a value-driven alternative. One of the clearest signals in the housing market comes from investors, and their behavior is changing fast. Landlords are increasingly choosing to buy in the North rather than the South, and the reasons are practical rather than ideological. In Southern England, high purchase prices, rising mortgage costs, and heavier property taxation have eroded returns. In contrast, northern markets still offer stronger yields and more reliable demand. In 2025, the majority of London-based landlords bought outside the capital, often competing directly with local buyers in northern towns. Historically, investors moved before the wider market, and their shift northward suggests a longer-term rebalancing is already underway. Southern England is facing a perfect storm of pressures. House prices remain high, mortgage rates are still elevated compared to recent history, and the supply of homes for sale has increased. This combination has shifted power away from sellers and towards buyers. Zoopla's analysis shows that many southern markets are already recording small price falls, with homes taking far longer to sell than in the north. Buyers are cautious, price-sensitive, and unwilling to overpay. Even when demand exists, it is conditional and selective. For sellers, this means expectations must reset. The era of quick sales and effortless price growth in the South has clearly ended, at least for now. London sits at the sharp end of this adjustment. With an average house price above £700,000 and some of the longest selling times in the country, the capital has become the weakest major market heading into 2026. In several central and west London areas, prices fell sharply last year, and nearly half of all homes remained unsold after 6 months. Sellers are increasingly forced into price cuts, while buyers take their time. However, this weakness also creates opportunity. Zoopla suggests value for money is slowly returning after a decade of underperformance, meaning patient and well-funded buyers may find rare openings, but only if they negotiate hard. The weakest housing markets in the UK offer a stark contrast to the North's resilience. Places such as Tunbridge Wells, Brighton, Canterbury, and Torquay struggled through 2025 with falling prices and long selling times. In parts of London, homes took more than 2 months to sell, and in some areas, over half of all properties were still on the market after 6 months. These figures are not just statistics. They signal buyer hesitation and excess supply. When demand weakens and listings pile up, sellers lose pricing power. These markets illustrate what happens when affordability stretches too far and confidence breaks. In slower housing markets, the balance of power shifts decisively toward buyers. Estate agents report that in areas where homes linger unsold, buyers face less competition, more choice, and far greater negotiating leverage. Sellers are increasingly forced to accept lower offers, offer incentives, or cut asking prices just to secure interest. For buyers, this can translate into better locations, larger properties, or improved value within the same budget. But for sellers, it is a difficult adjustment after years of strong conditions. These dynamics highlight a critical lesson for 2026. Market conditions, not emotions or past prices, now determine who holds the upper hand. The biggest takeaway from Zoopla's analysis is that housing decisions in 2026 must be hyperlocal. National averages are no longer reliable guides. Instead, buyers and sellers need to focus on affordability, demand, selling times, and the type of property they are dealing with. 2 homes on the same street can perform very differently depending on layout, price, and buyer appeal. In strong markets, realistic pricing can still lead to quick sales and growth. In weaker markets, patience and flexibility are essential. The winners in 2026 will be those who understand their local market and act accordingly, rather than relying on outdated assumptions. The UK housing market is entering a defining phase. Growth is no longer guaranteed, and mistakes are far more costly than they were during the boom years. Scotland and Northern England are showing what stability looks like in a higher-rate world, while much of the South is being forced to reset expectations. For buyers, this shift creates opportunity, but only if you choose the right location. For sellers, it demands realism and strategy. The next decade of housing wealth will not be built by following national trends, but by understanding local dynamics before everyone else does. In 2026, postcode will matter more than ever.